Hindalco, ARM has offered senior notes, and the fact that Novelis numbers haven't quite lived up to the expectations could well impact the stock. NMDC has cut the iron ore prices, and therefore that stock could be in focus. Man Industries CFO Sanjay Agarwal resigns. Watch out for that one as well.
All right, Chakri Lokpriya joining us this morning, managing partner at Red Strawberry. We're speaking with Nilesh Jain, head AVP Technical and Derivatives Research at Equity Research at Centrum Broking as well. Very good morning to you, Chakri and Nilesh. Great to have you here. Nilesh, let me just start with your take on levels. We spoke a short while ago with Rahul Ghosh to get his sense. I want to understand what you're thinking. What is the sort of broad range of the Nifty that you're looking at right now?
Very good morning to you. Good morning, everyone. So looking at the recent development that we saw, Nifty broke below is 200 DMA after a long time, and sustaining well below that, that's not a quite a positive sign for the market. So overall, we are getting a sense that Nifty may revisit its November month's low of 20,263. So somewhere around that, we may see Nifty testing those levels once again. Any pullback towards 23,900, 24,000 might get sold into, because there are multiple hurdles at 24,000. If you see 50 DMA, 21 DMA, both are exactly placed at those levels. Even on derivative front, we have seen a continuous call riding at 24,000 and 23,900. So those data basically indicates that any pullback might get sold into, and we may see another round of selling in the Nifty that may take Nifty towards 23,300, 23,200. And broader structure is more sort of a time-wise correction. From next 1.5 months perspective, we expect more sort of a consolidation in the broader range of 23,000 to 24,200. So that can be a broader 1,200 point trading range. Bank Nifty has been a major pain point yesterday. We have seen a smart recovery in the second half of the session, and due to that recovery, the Bank Nifty managed to hold on to its gain towards 49,700. So that has been acting as a major support. I would say a multi-month support in last few months now. So 49,700, I would be watching out for that particular level. If it closes below that, then it's a sell candidate, and we may see another round of selling towards 48,600 to 48,000. So as of now, it's an avoid taking any contrabet on the index. Better to focus on stocks and sector specific move.
We come to the stocks and sector specific moves. Nilesh, let's get your stocks, and then of course I'll ask you what you think about TCS.
Right. So ahead of the numbers, TCS will be in focus. Definitely, we have seen a smart recovery in TCS yesterday. But it's important to watch out for numbers specifically, how it will react. But looking at the structure, it looks like we may see a positive move towards 4,200 to 4,250. As far as my stocks are concerned, I have two buy recommendation. First of all, Oil India. Yesterday, we have seen a good rebound in the Oil India, this particular stock. And recently, we have seen a good base formation in the zone of 420, 430. So looking at the overall structure, it looks like it is heading towards 505 to 511. And can be bought keeping a stop loss below 480. So 480 will be the stop loss for the long position in Oil India. Apart from that, L&T Finance Holding is another stock that is looking attractive on the chart. We have seen a good rebound in this particular counter as well. We have seen a buy crossover, as well as good price action and volume action was seen yesterday. So we are expecting a follow-up move in this particular counter towards 152. Stop loss can be placed at 138.
Okay, well, watch out for those. Now, Chakri, I want to get you in on TCS first, because that's the big one, and then get in Nilesh's view on that one too. But good morning to you, Chakri. And I wonder what within TCS's delivery or commentary is something that you are watchful of, and could that have ramifications for the IT space at large?
Yeah, good morning. I think, you rightly pointed out, it's not about what they're going to report. I think as long as they report something about a -1% revenue, dollar terms, and net profit growth about 5-6%, that should largely be in line with what's expected out of them. And, this has been a period where the rupee dollar has been very volatile. So therefore, usually IT companies are not good at hedging with such level of volatility, which means cross currency will hit these guys. That might be one negative surprise, but that negative surprise is kind of going to be ignored by the market. Now, what is important is the order book. Now, the order book growth needs to be, if it's closer to 9 billion or above, and with an indication that BFSI is strengthening. I think these two things will help the stock move higher. And or even the lack of absence of any other negatives is enough because the stock is kind of bottomed out fundamentally.
Apart from the IT play, and of course, IT is going to be the big one in focus, Chakri. I'm just wondering if you've seen the initial rush of numbers and business updates that have come in, and if anything has stood out for you specifically. And let me come specifically to a Tata Motors, the kind of views coming in on a Tata Motors. Would you say that it's time to take a bit of a bet on auto, which has not been the most loved category?
Tata Motors is a slightly different animal than the rest of the Indian autos because, it has both global sales as well. And now, if you look at its valuation of Tata Motors, trades at about 4 or 5 times EV/EBITDA, which is in line with all the BMWs of the world. So versus, the Indian auto companies which trade at far higher multiples. And so given this mix, I think, as far as Tata Motors is concerned, as long as they keep up the JLR sales at more or less the levels of last year and an improvement in commercial vehicle sales in India, I think then that places the stock well because in any case it is an inexpensive stock versus its peers. On the other hand, the Indian autos, I think, except for companies like M&M which have product launches, the rest of them, including M&M, are seeing a volume slowdown. So I think it's still best to wait until, and I strongly believe that, a rate cut is sooner rather than later.
Just want to get a sense from you as well, Nilesh. If you like TCS right now, what are you looking at TCS on the chart? Let me add a persistent as well, because I think IT is going to be in a bit of a focus ahead of the numbers. We might see more weakness today, do you think? And just these two specific counters, TCS because it's in flow, persistent because it's been taking it to the chin last few days.
See, I would be a buyer if we see any dip towards 4,000 or maybe below that because the major structure on a positional perspective is looking positive. On a weekly time frame chart, if you see from past almost 6 to 8 months, the stock has been trading in an uptrend, making higher top and higher bottom formation. So the recent swing low, which was placed at somewhere around 3,900, that will be my stop loss. So I would be a buyer if at all we see any dip. As of now, it is on the verge of a breakout from a 200 DMA, which is currently placed at 4120. If it sustains above 4120, then we may see a short covering rally towards 4200. Since a lot of short buildup was seen in this particular counter earlier on the back of correction that we have seen. So as of now, I would be, waiting for a breakout, or I would wait for some dip towards 4,000 to buy this particular stock. Persistent system, again, this particular stock has been in an uptrend and one of the outperformer as well. So it's again a buy on dip as well, buy on dip up to 6,000, keep a stop loss below 5850. And on the upside, we may see another round of buying towards 6,600 to 6,800.
Okay. I just want to quickly bring in conversation around one set of stocks before we take the break, if we can, and that is on the EMS stocks, right? Big cracks in trade yesterday. Chakri, would you buy the dip, or is this Tata Electronics Pegatron deal or valuations, or are these stocks hunting for reasons to correct, and any large competition coming in is good enough reason for that?
Good point. These stocks have gone up on the expectation that one, EMS is a growing sector. Both domestically, the revenue should grow, PLI will help. And on an export basis, their component of share of revenue will grow. Now, this whole thesis is now, and the valuations therefore have moved up. In between, there was a slowdown in the export volumes, but the valuations were right up there. And then you saw some amount of export pickup. And against that backdrop, now you have new Trump coming in the US, trade tariffs we don't know what they're going to be. And then the PLIs have to accordingly rechange depending upon the new Trump policies. I think given all this uncertainty, competition notwithstanding, I think unless there is some kind of a clarity on how these companies will reposition themselves if there is a Trump tariff, so which means the number of variables are unknown. So it's best to stay away until the dust is more settles down.
Okay, we need to step into a break, and that's why when we come out of the break, Nilesh, I'll come to you on these EMS stocks because they were very active in trade yesterday. So would love to know about those for you, and of course, some of the others as well. Stay tuned, viewers. We'll be right back. Right, back with India Market Open right here on NDTV Profit Pre-Open. It's about to kick in a couple of minutes. But before that, like we said, we were talking about the EMS stocks. And while I welcome in Shrikant Chauhan as well, the question to Nilesh Jain. Nilesh and Shrikant, good morning. Thanks for joining in. But Nilesh, the question to you was on this EMS stocks, right? So yesterday was a crack of sorts. Can it deepen the Dixons, Ambers, etc., or will it be stable?
These stocks has been in a secular uptrend, and some retracement is quite possible that was been missing since a long time. I think it's time that we may see time-wise correction in these all stocks, specifically Dixon Tech. This particular counter is looking slightly more sort of a consolidation with negative bias. It may test the levels of 16,700, 16,500, but I don't see any major crack. This is just a healthy correction, I would say. Which is good for all these stocks and can be bought on decline. So I would be a buyer if Dixon falls in the range of 16,000 to 15,500. Similarly, Keynes Tech is also likely to witness some amount of retracement in the zone of 6,500 to 6,700. As of now, it's an avoid, but I would wait for some meaningful dip towards 6,500. Then probably I'll think about buying. Stop loss can be placed somewhere around 6,100 post breakdown. Then we may see a gradual up move in this all stock. So overall, I don't see any major crack. It's just a healthy correction that we are witnessing as of now.
All right, just about 5 seconds to go for the pre-open rates. Shrikant Chauhan also with us this morning. Shrikant, great to have you on. I mean, you know, it's I think a little bit of a challenging time, especially for investors who have been seeing a one-way go. What would you do with the Nifty today? Let me just start with your Nifty call right now, because the kind of swings that we've been seeing may have left people a bit confused.
Good morning, Tamanna. Good morning, Neeraj. I think more than investor, it is challenging time for traders because they are finding a lot of difficulties. The markets are breaking important lows and it recovers back. In the previous week, the market has broken the level of 24,200, but again, it came back to the same levels of 23,400. So it is like really like a toughest task for traders to trade. But yes, for investors also, it is like very difficult to understand because stocks are falling from their highs. They are down more than 20-30%, but index is down just by 7-8%. So broadly, I am of the view that this market is going to spend some more time within the range because it is not breaking the level of 23,000, despite the dollar index is at 109 and currency is at around 86 levels. So I am of the view that the market will break the level of 23,200 by opening lower to that. I'm to say something will come which will send the market below the levels of 23,200 at the opening only. So that's my view. But for the time being, the way yesterday we saw recovery in the market and there was like specific momentum or we can say strength in stocks like ITC, TCS, Infosys, Reliance Industries, I'm expecting market to move upward towards 23,800. And on the dismissal of 23,800, where there is good amount of call writing, we can even see the levels of 24,000. And today it's a day of weekly expiry, and also US markets US markets are also closed. So broadly, I'm of the view that today, in case if we see any lower opening, we should look for taking some long bets, and we can again look for taking some specific bullish view on specific stocks.
Specific bullish view on specific stocks. Let's get to those specific stocks very quickly, Shrikant.
Yeah, in that space, we like Reliance Industries, and if we see the technical pattern of it, then it is consolidated. It is very close to its important support levels, and it has been consolidating since the last almost 10-12 days within the range of 1260 and 1220. On Wednesday, we saw recovery from those levels, and there were like number of reports from foreign broking firms. So broadly, I'm of the view that the stock is heading for 1325, 1330. We can keep stop loss at 1220 for creating any position with a short-term view. So it's a buy at current levels, and it is very close to its all-important retracement support. So I think it's a decent buy at current level. We also like Tata Motors, and there we are seeing good amount of positive divergence. After falling from the highs of 1200 to almost 750, 760, finally it is moving upward. So, and the news flow is also positive. Based on its technical formation, I am expecting stock to move towards 850 in the near term, and we can keep stop loss somewhere close to 770.
Let's look at what's moving in early minutes of trade. Borosil Renew once again doing very well this morning. And news flow over there pushing it as well. Same for Manappuram Finance. Manappuram Finance 10% up in the first few minutes of trade. Sterling and Wilson is jumping today. SRF is something that Neeraj mentioned as well. SRF, we should pull up Naveen Fluorine as well and see what's happening there. Are we seeing an upside today? Yes, about 2.5% up. Lupin also coming in on early trade. So these are some of the factors. I want to see what's happening with Ashiana Housing. Good updates there, which definitely look positive. It ran up yesterday. Well, it's giving up gains early this morning in trade as well. Also the downside, look at an HDFC Bank. And all of these will settle, of course, but an HDFC Bank seeing a bit of pressure coming in, as is Tejas, a UBL. Now, UBL, I'm not surprised at all, and we'll have a detailed conversation on this later on. The Alco-Bev space overall is going to be under a little bit of pressure. In fact, Chakri, let me get you in on this. What is happening between UBL and the Telangana government? What is the impact of that, not just for UBL, but all of the companies in this space that had run up on Telangana changing its liquor policy?
Indeed, because, for instance, Telangana is a big source of revenue for all the alcohol companies. And, various governments are now changing their revenue, hitting where it hurts the most, which is the top line. And so under the new policies, that will bring about a lot of downdrift to revision down of the revenue estimates for these companies. With that kind of uncertainty, I think it's best to wait where the policies will land up. For all the promise of alcohol companies is, I think right now we need to wait for the regulatory policies to settle down.
Okay. Now, it's time for the big brokerage call, but I do want to mark Manappuram. Manappuram Finance is 5% higher. It is not 10% higher, but 5% higher, because there is a Jefferies note on this, and therefore that stock is very, very active as well. Maybe we'll talk about that with our experts. Let the pre-open rate settle down. But the big brokerage call, CLSA has upgraded Bajaj Auto to an outperform rating with the target price of 9,439. Harsh Johnson with that note. Harsh, good morning.
Well, good morning, Neeraj. 10% upside from here is what CLSA sees, but really the relevant factor is that it's that double upgrade from underperform to outperform now, which is the key. Why have they done this? One, the stock has corrected 32% over the past 4 months. Value beginning to emerge likely. Currently trading at around 21 times FY27 EPS. And this is despite the e-two-wheeler franchisee improving, market share also improving, and margins remaining as is. So all of these three factors, despite all of that, you've seen a large correction on the stock price. The key here that CLSA feels is that despite the increase in market share, margins have not been hit. This is key for them. They believe that market share increasing without hurting margins is positive. Now, they also believe that company deserves a 10 to 20% premium multiple over the longer term average of 19 times, and currently trading at 21 times, they believe is a reasonable valuation. Other triggers to come: one, export volume recovery likely. They also feel that there will be some amount of competition from TVS and Hero, as has been the case, but they believe that Bajaj Auto is focusing on value over volume, and they're focusing more on the 125cc and converting the 100cc customers to 125cc customers. That's where they believe Bajaj Auto will do much better than some of their competitors. Therefore, while volume-wise they'll do a 6% versus industry volume of 8%, they are believing that earnings CAGR will be at roughly 12%, and it warrants a 23 times FY27 valuation, which is a 10% upside from here.
Okay, Manappuram Finance, just let's talk about it a bit. What's happened yesterday is that the company's unit, Asirvad Microfinance, was granted relief by the RBI. In fact, RBI lifted sanctions on the disbursals of loans on Asirvad, which they had imposed in October last year. And those restrictions, of course, coming in after concerns over pricing policies of the company. Now they've been lifted. Remember, Manappuram had acquired Asirvad in 2015 and it contributes 25% to Manappuram's AUM. So this was one big drag which has come off, and that's why you're seeing that moving forward. I don't know, Chakra, if you have a view on Manappuram right now with this news coming in. We're already seeing some impact in the pre-open session, but would this be a good buy in your view or a good time to come into this space?
There are two things. One is, the RBI sanctions being lifted will clearly help because, that's pulled down the growth rate quite a lot. The second is, in the upcoming budget, there is a talk that all the microfinance companies, they some kind of a help need to be given to them, some kind of a relief or creating of a special fund in order to help financing of the small-time lending that they do. So if that happens, clearly, that's going to be a major regulatory push helping MFI companies, and that will also help Manappuram Finance significantly.
Yep, 4.9% as the pre-open rates have settled down. This is interesting. Just want to pull up though the chemical companies as well, SRF and Naveen, and see what they are doing in the session as we speak. 2.78%. Nothing out of the world or extraordinary, but on a flat day, this 2.5%, 6% for SRF is something that actually you will take with both hands. So good going here. Refrigerant prices up. Shrikant Chauhan, would you trade these names after the way they are opening up?
Neeraj, if we go through with the technical pattern of these companies, then specifically SRF, this was showing some, we can say, a good amount of strength since last almost 3-4 days. It was around 2200 levels and it is now currently at 2350 and maybe today it is opening around 2500 levels. So while looking at the technical pattern, the stock has spent a lot of time, I'm to say more than 2 years, within the range of 2100 and 2700, 2800 on the higher side. And whenever there was like negative news flow, it fallen to the levels of 2200 levels and it recovered back quickly. This time also the pattern is equally similar, but the way the stock has taken time and it has not fallen below its important levels, I am of the view that in case if it breaks the upward range, then we could even see the levels of maybe 3000, 3200. So even at this level, it's a buy if there is a little bit positional view, because I think this time the stock is showing real strength. So we should look for adding position, but with a view to add more on dips and with a view of at least next 2 to 3 months.
Add on dips and with a view of 2 to 3 months. So that is the point that Shrikant is making. I wonder if Wonderla is indeed going to be up about 1%, nothing too dramatic. Okay, on the NSE, a lot more sedate, some of these names. But yeah, SRF and Naveen are doing okay. Insecticides India though, is that also showing a smart uptick? Can we just pull that up with the management that we are going to talk to? About 1%. So keep an eye out for some of these for sure. Chakri, aside of IT, there is also Tata Metallics coming out with numbers, and metals are in news. Novelis numbers were wobbly. NMDC's cut prices as well. Any thoughts here on the metal pack?
I think metal stocks are trading at about anywhere between 4 to 6 times. So valuations are actually very much in line, but there is no top line support. And when top line support is not there for cyclical companies, their margins collapse very easily. There is no sign anywhere that within India or in some of the global markets that the demand is going to go up for metals, commodities. They select pockets you can have, but so largely against this backdrop, I think they at best they'll trade water, but it's unlikely to make any significant return out of the metal companies.
Okay, metal would be maybe keep it aside. I'm wondering how you would look at a Bajaj Auto. There is an interesting note out there. It's doing okay, pre-open, not too much of excitement, just about 1% up, Chakri. But, you said Tata Motors is a different beast. You will look at it differently. How would you look at a Bajaj Auto? A clear underperformer in the last few weeks. Is the street done with the selling is the question?